Yes, hello, good morning, and welcome to our Tax Savings Tuesday. Before Thanksgiving, before Black Friday, we would like you to have more reasons to be thankful for. Again, I'm Christopher Wycoco, IRS Acceptance Agent, Financial Planner, and we run a virtual accounting and wealth planning company here in the US. So we do this every second and fourth Tuesday, but because of holidays for November and December, we are doing the tax savings every second and third Tuesday on 10 in the morning at Central Time. I'm going to share my screen. All right, there you go. So we're going to discuss about 7 tips on how to strategize on mastering your personal finances while running your business. So this presentation is only less than 30 minutes, and these are the discussing key points. We're going to talk about the effective income management to ensure personal financial stability while running your business and the top strategies to master your personal finances. So our webinar agenda, if you would like to receive a free copy, just type your full name, email, and send it to 956-425-WYCO or 9926. The presentation is only less than 30 minutes. At the end of this, any questions, we have Q&A. We can answer all the questions after this presentation. And also, there you go. You can download the free 10 steps business improvement checklist now on our website, www.wycotax.com. And then subscribe on YouTube channel. We have a replay. Just type Chris Wycoco. Just a disclaimer that this material has been prepared for informational purposes only. It is not intended to provide and should not be relied for any tax, investment, legal, or accounting advice. Examples and other materials in this webinar are only for illustrative purpose and should not be relied upon for technical answers. Our company, Wyco Tax, is a virtual outsourced accounting and wealth planning company, and Wyco Tax is not associated with any institutions on this presentation and is a private business providing resources for small businesses. Let's jump into this. The target attendees, these presentations are targeted specifically with doctors, with their other own companies or healthcare practitioners in general, self-employed and work from home, receive 1099s, have S corporations, LLCs, partnerships with or without employees, non-accountants, high-income professionals making more than $100,000 a year. So for 2022, the tsunami of IRS audits are coming. As a matter of fact, we've been serving 20 states for the past years, and the audit are coming from different states. They have 3 years to audit, so that was why you have to avoid the trial and error approach that will cause IRS red flags that paralyzes your business. But in able to prevent the red flags or not for your company not to be in the red flag, you have to follow top 7 of this, aside from good record keeping. These are the additional top 7 business income management strategies. So, 7, you need to maintain a robust cash flow management. How are you going to get this done? Monitor the income and expenses diligently to ensure positive cash flow, creating a budget system that accounts for both regular operational expenses and occasional large expenditures. Uh, the benefit of this, what are the regular operational expenses? In other words, we call this fixed expenses: rent, utilities, insurance, internet. It could also be employees, cost of goods sold. The occasional large expenditures are, for example, you want to improve or develop a mobile app, a technology, or even you would like to have a once a year team building for your employees. So those are occasional large expenditures that you want to set aside a budget 6 months prior, even like 1 year of budget. Because the benefits of this, like what we said, you cannot control what you don't see, or you cannot hit the target that you don't see. With controlled cash flow, the business remains agile in responding to unforeseen costs and seizes growth opportunities without compromising stability. Sometimes the occasional large expenditures, sometimes they call this as a contingency fund. maybe 10% contingency fund that you don't know what's this contingency fund can be used on other expenses unforeseeable. For example, there are some cases when there are typhoons, hurricanes, earthquakes, the natural disasters are beyond your control, but you'd want to make sure that in case that happened, especially here in Texas, 2020, there was a snow that cut the electricity, and then we have to buy power generator. You have to provide shelter, make sure your employees are safe going to your work, or even offering a work from home option. So those are the large expenditures that you want to have. Then number six, build the cash reserve fund. Action steps: establish an emergency fund specifically for the business, ideally holding at least 3 to 6 months worth of operating expenses. Yeah, this is what we discuss as contingency fund. But also, the most common problem that we're seeing is when a person only uses his business and personal bank account. He put all his 1099 income to a personal account where he's already been a freelancer for the past 10 to 25 years. That should not be the case. Your business should always have its own income, business income account. All right. So there's no commingling because it's so hard to really have a blueprint of your financials if you're mixing your income and then your expenses for your business and personal. That's why we recommend, later we're going to show to you, we recommend that whenever your company, especially here in Texas, are taking home at least 50,000 of the net income. So for example, we say this is your income, let's say you made 2.3 million, and then your expenses is 2 million, you still have $300,000 of disposable money or taxable income. You need to at least put yourself on payroll out of the 300,000. So that 300,000, maybe 200,000 would be your payroll because you have other bills to pay. So that would minimize your business taxes. Okay, so that it cushion and provides a buffer against revenue drops, unexpected expenses, economic downturns, allowing the business to remain stable even in challenging periods. But also, your business should also plan for your retirement. Top five, you have to utilize 401k for retirement savings. As a matter of fact, this is the basic, the 401k, whether it's a solo, even you are don't have employees, and as long as you have your income, although there are some income limits, we do that presentation more in depth in our private chat, private group called Pro Business Mentor group. On It's gonna be attached on the link below after this presentation. So the solo 401k could allow you to minimize your taxes also because you're putting your money anytime, any money you put in your solo 401k. Let's say you have, again, to the example of 2.3 million, then 200,000 is your salary, then you can allot portion of the remaining 100,000 to your 401k. So let's say I'm not sure what's the limit. I think somewhere like 23, 24,000 for, so at least 24,000 go to your 401k, and then now that is no longer subject to this 2024 taxes because you're putting your money to a tax deferred product. The benefits of this is it contributes to a 401k for a tax deferred growth, reducing taxable income now and compounding retirement savings over time. For employees, offering a 401k can boost also morale and help retain talent, because at this moment the competition is not just about their monthly salary, but also what are they, your employees looking in the long run, or do they have benefits, health insurance, do they have any equity eventually. So those kinds of benefits and compensations could retain your employees, because I believe that your employees are your asset, and keeping them happy and satisfied and planning a long term, the career growth plan, it's cheaper rather than hiring a new employees. Then number four, this is alternative option is to invest in index universal life insurance. So again, some of these strategies may not fit for you. I heard a lot of chat that, oh, I would rather do with the Roth. I would rather do with variable investment. Again, the investment could be, if you are, you need to assess the level of the risk that you're taking. Are you risk investor? Are you like moderate in risk investor, or you're high risk investor? When you say high risk, that you don't, even you'll burn that money, you're not gonna end up broke, and then you still have funding for your family. So that could be, you could invest in a high risk. But index universal are more like low to mid risk, because it has a cap. You're not gonna lose money on certain amount, but you're also not going to gain that amount of money compared with the other investment. The use of IUL as a financial tool to protect the and grow wealth. The choose an IUL plan with investment options linked to index. We have S&P 500 to balance risk and return. The benefits provide both debt benefit and cash value, but this is the most common. A lot, some people putting the IUL is not just for death benefit or living benefit when you get cancer. That's not the only benefit of this index universal, but they also has cash accumulation, where you can use that money to pay off, at least strategize to overfund your IUL, and you can pay off your mortgage. If you have a 10 to 25-year mortgage, you can use alternative, as money from your cash value from the index universal life, that instead of you subject to interest for 25 years, you can minimize your payment of your mortgage within 10 to 15 years. So that, which is the money that you're getting from this insurance under the IRS code 7702 or 7703 are non-taxable. That's why it's a good investment tool if you have an IUL. Top three, diversify with annuities for long-term income. Consider fixed, variable, or index annuities as part of a retirement plan, especially if you want a predictable income stream. Choose a structure that aligns with your risk tolerance and income goals. The annuity, the main difference, most common question, what is the difference of annuity and 401k? The main difference that annuity safeguard the principal. I don't know if you heard other people, they put their money in 401k. If you heard that they lose money on 401k, this is opposite of annuity. They safeguard your money. The principal is still there no matter what happened. You have, if you put, again, and the example of this 2.3 million, if you put 100,000, the annuity, it's still there, the principal, no matter what happened, and it has the tendency to grow your money between 4% up to 12%, with doesn't incurring too much losses on your investment. Number two, top two, reinvest profits strategically. Set aside a portion of profits each quarter to reinvest in areas like technology, employee development, and marketing. Decide what percentage of profits to reinvest based on your growth objectives and cash flow. I also want to add here real estate, because this kind of they appreciate time in time, especially if you're working from home. I do suggest that might as well use your home as an investment. For personal reason, 100% that you don't use your house for business. I don't. You have to. It's good for you to live there, but it's also way better if you would be able to use your home because of home office deductions, depreciations, those kind of business expenses on your tax return. So you were able to deduct expenses portion of your house, but at the same time, it grows and appreciate on value. Technology, employee development, and marketing. There are what you call research and development tax credits if you're investing in technology. You want to the benefits of this. You want to make sure that the business remains competitive for your employees and for your clients. Because again, it's, I believe that your clients are also your employees. Your employees are also, I mean, your clients. You need to nourish them and grow with them. And the number one top suggestion: regularly review and optimize your tax strategy. I do, when your tax professional, whoever you're working with, says that you pay advanced taxes, they're not, you are not maximizing your savings. You should be at least planning. If you're not seeing your tax advisor or financial planner every 3 months, you're not optimizing your benefits with the Internal Revenue Service and all this strategy. So that's why it's better they review your entity, they review your record keeping, they also review your disposable income and what would be your 5 to 7 year plan. because the strategic tax planning reduces the burden on your income, freeing up funds for investment or retirement. Again, it is not how much you make, it's how much you save and invest that minimize the taxes. Together, these strategies create a balanced and proactive approach to managing income, protecting against risk, and ensuring financial security for your business and personal life. So this is how we deal with client. Let me walk you on the journey. I'm presenting you more like a digestible, literally like a pizza pie. When you go with us, especially when you're a doctor making 2.3 million, how do we deal with the client? The way we separate ourselves, we go first your entity structure. If you're this is how we're going to show you a 30,000 tax savings on the pizza pie chart. Your business structure comes first because taxation has different business structure has different type of taxation. And then we're going to review your blueprint because like a business is like a house, it has furnitures inside. We need to see your fixed furniture or fixed costs, your record keeping. And then from there, what are some of the business expense on number three that also considered as personal expense? So that is item number three. And then number four, let's say a 2.3 million total gross income, taxable income, less all the expenses, that there's the 300,000, the business tax credits, we would assess whether you're qualified with energy, with your car efficient credit, with your solar panel, with research and development, with arts. And then number five, if we cut that 300,000, if you still have a 100,000 taxable income, then that's the time that we can plan to you park your money for your retirement, for 1K annuities, IUL combination. And then lastly, tax filing. All right. So based on the 30,000 tax savings that we were able to save, that's still your money. You can now plan what we discussed on slice five. These are some of the options where you can park either to your life insurance, 401k, Roth IRA. So these are some of the investment that at the end, it's what you save and what you make. So what are the use when you're planning your money and you're parking your money somewhere? There are different benefits of having a retirement planning because you could it's divided one to three. We have seven from knowing your financial position, legacies if you have dependents, replacement income because you could grow your retirement while you are working at the moment. If you have kids, it could be used on college funding. Business succession, it is something that when you're about to retire, there's like funds to be used for training for the new your apprentice or your the new manager, the new employee that you would be able to use these funds from the life insurance. Then also it can cover mortgage and other debts. That's there are some advanced planning that you can do to pay off those mortgages. And then estate tax coverage, you minimize yourself from tax exposure from probate tax. All right, so that's why you entrust your business with our company. We are a worry-free, year-round, competitive, and on-time accounting and wealth planning service solution and the benefits of outsourcing with us. We do offer it 100% virtual. You have peace of mind, you save headache, time, and then save money, faster access to grant and loans. Because whenever you have us, you typically have three people on the team: one a senior accountant, me, and as a business owner, and one financial planner on our team. So that's why we have a one-time offer. If you would like to, if you're still behind with your books, you're overwhelmed, we have a 523 discount on when you bundle your accounting and tax preparation for year 2023. All right, so the next upcoming tax saving Tuesday will be on December 10th, 10 in the morning, Central Time. We're still gonna do two more tax savings Tuesday for December before holidays. And if you have further questions, let us know. So the replay of this presentation will be seen on our YouTube channel. So again, thank you for watching our Tax Savings Tuesday because our company's goal is to increase your cash and asset, but reducing your taxes. Again, because